analysis on your own. So with this video, I'm going to teach you on how to make analysis, how to identify one, consolidation, two, flag pattern, then three, breakouts. So with this, we'll be able to determine where the market will go. The only thing is you have to put these three things into consideration, then plot your lines, trend lines, as we know. Then when done, you wait for the market to meet your condition, then you put in your trade. So in order not to waste time, we are doing analysis on 30 minutes time frame. So how are you going to identify this? With that, you can see from here market was on a downtrend here. Okay, so first you come and check. You come and check on the daily time frame. That is this point where it makes a rejection. Then you go to a D1 time frame. So on your D1 time frame, let me shift it. You see, on a D1 time frame, it was a sell. You get it? So you just go back to your 30 minutes time frame. So from this point, we know the market was on a downtrend. So you just plot your line, your trend line from this point. So to this point, okay. Then make it a little bit wire. Okay, good. So this is how you plot your trend line from this point to this point. So once it gets to this point, the market starts making a reversal. So once it gets back to the reversal, you just put in your trend line over here. That is where the market makes a rejection. That is from this point. Extend it further. Okay. The market makes turn to this point and makes another rejection over here. So it came back to where you plot your trend line, that is this point. Okay, you see, so once it comes here, there was a reversal point at this point. When you go check on your D1 time frame, you will see that there will be a small rejection. That is a downtrend, but you should be mindful of false breakouts. So once it turns to this point, it comes back to this point. So this is where we are making emphasis on. Once you plot your trend line here, the market goes up and comes back to your daily one time frame here. So at this point, once it touches here, you can take in your trade. Okay, you can take in your buy trade, because this is where we are looking for. The market trends down to this point, then it makes a buy somewhere at this point. You put it there. Once it comes back, it makes a retest. That is a perfect place for you to enter your trade. Then you wait for your breakout, you wait for your TP at any point that you wish to. So once it goes here, it comes here, what you are looking for is a breakout. Okay, because with this it started making a consolidation. So we are looking for a breakout. Now the breakout spotted at this point. Okay, it makes a breakout at this point, and what do you see? A bearish candle over here to make a retest back to our trend line. Then boom, you see that strong buy over here. So once it makes that strong buy, it started coming back again with 2 candles, up 2 candles, down 2 candles, up 2 candles, in that order. So if it's making such uptrend and downtrend in such manner, what we are looking for is this pole. Okay, this buy pole over here will serve as your flag pole. So what do? You just plot your flag pole to where it ended the buy to this point. This is where you put your flag pole. Okay, you just plot your flag pole over here, then you start plotting your trend line. One here, then another 1, 2 over here. So this is a flag pole, and this is your flag. What do you call it? This is your flag. I mean, to make sure that it is in a bullish flag. This is what we are looking for. So once it makes this point, you will see that once price gets here, it bounces back. Once it gets here, it bounces back. So if you are good at this, you can be able to trade the up and the down of this flag. Once you are trading, you make sure that you go in for the spike part. That is when price has been able to trend down here, then it's going up. That is where you'll be able to take your trade. So you trade for the spikes, okay? Because with a downtrend, it can make a breakout. As we all know, boom and 1,000 and crash 1,000 trade for a long period of time before it starts crashing up. So once it makes put your point here, you are looking for a breakout, and there was a breakout over here to this point. So you just put in another one trend line over here. It's very simple to plot trend lines on your own and determine where the market will go. So once it makes a breakout, this is where it ends, and it started making an up and buy here. So you put your trend line over here. Now it went back into our flag, but since it has made a breakout over here, this is where our flag pattern ends. Okay, this is the pole and this is the flag. That is where our flag ends. So what we are looking for is another form of technical analysis that we are looking for. And with this, what we are seeing now is a consolidation. So just plot your trend line over here. You just plot it at this point where it makes a rejection. You plot it one here. Now then you look for these tips. Okay, with these tips you can put in with your trend line to see the level price, so that once it gets there, you know that this is what I have to do. So once it gets here, it makes a consolidation. That is from this point to this point, from this point to this point. It makes a small breakout, which it might see that there has been a breakout, but always once there is a breakout, you always wait for a retest, because we have false breakouts that can deceive you in the market. So once it breaks up, you just wait for a retest back to your trend line before you start buying. Now once it makes that small breakout over here, it came back to our consolidation box. Okay, so once it gets here, you know that price is also going to move up again or another breakout sell, but we do not see anything like that. So it just went back, another false breakout over here, and now back to our consolidation zone, and it's moving. So with with this, no one could tell you that 1000 will once fall again, but since we have spikes, it will be spiking up, trending down, spiking up, trending down. But the main motive of this 1000 now is to make a downtrend to meet our consolidation box once over here. So with that, since this is our consolidation box, we can put another trend line over here. Okay, we can put another trend line over here. Good. So what we are following? We are following an uptrend. Okay, a trend line uptrend. So once price gets to this point, it can be another buy here to this point, so it break up this trend line. That is where you are going to see a major downtrend to this point, or it breaks out this point and move to the level zone for another false breakout, or once it passes this point, this price level, there is a breakout, a true breakout. So it's either you go in for your first entry, once price goes, you are done. Once price retests back to our trend line, then you take your trade. Okay, then you take your trade, second entry over here, then market will go up again. So as you can see, the price is moving downwards. Since we have spikes, it will move up a little bit, but its main motive is to trend down back to this trend line or makes a breakout to this point. So let's see, on 5 minutes, you see on 5 minutes what we see here. On 5 minutes, it's making a downtrend with small bullish candles, for which if you are a master of plotting trend lines, you'll be able to plot this trend line to here. Good. So once you plot this trend line, this is our major trend line that we are looking for boom 1000 to sell to this trend line here, then it goes back. So once price gets here, there should be another spike to this point, then downtrend. So with that, where are we determined? Here can be a spike zone for 1000. Okay, once price gets here, there might be a spike to this point, then it continues its downtrend. So go back to our 30 minutes time frame. You see, there is what we are looking for, and it's still going. So it is very easy to understand this concept. You can take this analysis to any indices that you want to trade, either the VIX, you know, as volatility, or the boom and crash. With forex too, you can use this same analysis. They also play out with this same analysis. So you can use this analysis to determine the direction of the market. You don't need to be told, and you don't need to someone always feeding you. With this small understanding, you'll be able to make something out of it, practice it on your own. Once this is where on the 5 minutes we are saying there should be a spike. Okay, on 5 minutes time frame, we are looking for a spike at this point. So let's see, go back to our 30 minutes time frame. So this is where we are looking for a spike. Once it spikes, it will meet this trend line over here as we are looking for. Okay, as we are looking at it, it will touch this point, then comes back to this trend line, or breaks down to a consolidation box. saying, oh, this is the flag pattern, this is this, but people are confused. So this is an example of a flag pattern. This is a bullish flag pattern, okay, and this is a consolidation one here. We made a breakout. Then this is another consolidation that it's currently making, okay, from this point to this point, this point to here, then back to this point, and now here, then it's coming back to this point, or the consolidation box trend line. So that is what we are looking for. So as a trader, if you want to determine the market, you always plot your trend lines, which are very, very important in every aspect of trading. It's very important for you to know the direction of the market. If you are a trend trader, it's an opportunity for you to take a trade once price hits at your zone here, then you start selling, okay. If you are a spike trader, once price gets here, you start buying. But as a trader, you should be able to trade both the trending and both the spikes, because you are not trading on 1 minute time frame where you'll be catching spikes, but this is an analysis, technical analysis that based on higher time frame. So you'll be able to trade both sell and buy. We'll go back to our 1 minute time frame. Okay, 1 minute time frame is still going. On 5 minutes, it's still there. Let's wait and see. So that is it. If you want to catch spikes it's very simple, and that will be my next video, how to catch spikes on higher time frames. That will be based on this technical analysis using the 5 minutes and 15 minutes time frame to catch spikes, looking at how the candles are formed to catch spikes so easily. And that will be my next video. If you are new, just subscribe to my YouTube channel, hit the notification bell. Once I drop any new strategy, then you'll be able to be notified and get useful of it. I don't normally trade every day. I only trade when there is an opportunity. So I just plot down my setup. Once conditions are met, I take my trade. So thank you for watching this video. Have a nice day.